In this video, I want to review the portfolio of David Tepper. You have the latest update from the 13F, and you see a lot of moves in his portfolio. You see that he added to Alibaba's holdings, he added some Chinese exposure, and he was already famous for calling big investment in China. But seems like he increased the Chinese holdings, so that definitely shows some conviction. In this video, we will try to go and analyze what is important in his portfolio, see what he has increased, see the reduction in his portfolio, what he trimmed. He trimmed some stocks to buy more Chinese names. We will make a review of this portfolio. It will be quite complete, and you see a lot of things are happening at the beginning of 2025. So it will be a very interesting year for this portfolio, and I will make sure to follow it in the coming months. In case this is your first video from this YouTube channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And I follow what David Tepper is doing. And in the past, his biggest position was Alibaba. He went on CNBC to call for the Chinese bull market, a lot of dividends, a lot of buybacks, a lot of implementation. The economy is expected to recover. And now the Chinese economy right now is at a bad state. We'll say it this way. They have deflation. They don't have a thriving economy. You don't have a lot of consumption. We start to see some recovery signs like consumption, for example, and the businesses in China were hit by the slowdown, more regulation, hit by COVID after effect. So if you look at his biggest holding, Alibaba, that's 15% of his portfolio, and he added 20% more. That definitely shows some conviction. If you don't know what Alibaba does, well, this is the big company over there, and the PE ratio for this company is roughly a PE ratio of 10. The company has some cash in the balance sheet. If you look at the quarterly data, you see that the cash pile decreased because the buyback program increased. They use some of their cash to pay a dividend. They use some of their cash to do a buyback program, and now seems like they have a net cash of what, $20 billion, $30 billion. So the dry powder is not that big anymore. So maybe they will slow down in buybacks. Okay, if you look at the EV to free cash flow of this company, EV, when you take into account the balance sheet, and the free cash flow is what matters for this company. Oh, let me. Oh, too bad. You can see that the EV to free cash flow is roughly 10. So you are paying a very cheap valuation for this company. The main problem of Alibaba right now is the lack of growth. It's becoming too big, too costly, and in terms of market share, Alibaba has been losing market share because of strong competition over there. You have JD.com, you have PDD, you have even in the cloud, they are losing to the Tencent cloud in terms of market share. This is very aggressive, competitive, and fierce. So Alibaba is not the leader anymore because of such a strong competition, and Alibaba is not growing anymore. If you look at the revenue growth in blue here, you see that since 2022, no growth. When it comes to the net income, you see that it has been hit by the 2022 effect and has not rebounded yet. In terms of the free cash flow, look at this. This is in blue. Free cash flow has not moved since 2020. It's stable. So the company is not moving anymore, is not growing, and is using the big amount of cash they have to do buybacks and dividends. What is the good multiple you pay for such an investment, such a stock? Do you pay a PE ratio of 10, PE ratio of 15? I'm not sure. But seems like David Tepper is loving this risk reward, is loving this situation. You are aware of the development in China from, all the Chinese tech companies with, that's a fund, but you have DeepSeek, you have the ChatGPT equivalent from Alibaba that is working well. Seems like Alibaba is still here, in the AI race. How far is this company, is Alibaba? How behind is Alibaba in this AI race? Actually, it's very hard for me to have a conclusion to this and to this question, but still, like, Alibaba is still here in the AI race, and David Tepper is betting on the company coming back to growth. I'm not sure about this. We will see in the coming days with the earnings report. We will see if the company comes back to growth. But definitely it shows some conviction. Alibaba is the biggest bet. And my opinion is, out of the Chinese tech, Alibaba is the cheapest one. You have this big behemoth filled with cash that generates strong cash flow. And you have this clear capital allocation policy, more buybacks, more dividends. Look at this. They are buying back what? On an annual basis, trailing 12 months. You buy back 5% of your shares, and you have a dividend yield of 1%. So 4 plus 1, you have a 5% shareholder yield. If the business comes back to growth, the business will make wonders. But that's a bet on the growth of the company. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. Okay, the second biggest investment from David Tepper is Amazon. He reduced the position in Amazon by 20%. Well, that's a bit strange, but because Amazon is growing much more than Alibaba. But yeah, I suppose you have to pay a higher multiple for Amazon. You have a PE ratio around 30 or 40, and he thinks you can make much more money if you just bet on China. So okay, very well. You can compare Amazon versus JD.com, but okay, very well. That's just an allocation bet. That's not a big change actually. The third position is Pinduoduo. Almost no change. Pinduoduo, similarly, it's in the e-commerce segment in China, growing very fast actually. The growth has rebounded sharply, and he added a little bit. So maybe he trimmed some of his positions in red to add to most tech holdings in China. And look at this. Look at the growth from PDD. This is a market cap of $160 billion. The stock has been volatile. And what about the valuation? You have a forward PE ratio of 9, okay? So basically the same valuation as Alibaba, but you are talking about a company that continues to grow. So maybe as a risk-reward perspective, maybe PDD is better because you have more profitable growth. But yeah, maybe David Tepper still thinks that Alibaba is the best opportunity out there. Okay. No change for Microsoft. He doubled his position in Vistra. Maybe you know Vistra because you follow what the senators in the US are doing. You have some investments over there. Call that whatever you want, insider trading. But that works. You have Nancy Pelosi investing a lot in Vistra Energy, Vistra Corp. And this is a company in the energy department. Look at this. One of the largest power producers and retail energy providers in the US. And the stock is going to the stars, basically. A lot of growth recently for a company that is becoming profitable. If you look at the Vistra, basically on a quarterly basis, the revenue has not changed a lot. If you look at the net income, that's a different story. Seems like the business is becoming incredibly profitable now, and seems like you have a lot of projects. And my guess is Vistra Energy is a big bet on AI data center that will need a lot of energy. And David Tepper says this. You can check some videos on the internet where David Tepper is talking about his bet on Vistra and other energy players. Basically, a lot of AI, a lot of energy is needed, and Vistra is one of the key infrastructure plays. So, the portfolio of David Tepper is China, AI, energy, because he still is investing in Amazon and Microsoft. So, he's still investing in AI and tech in the US. Also, for JD.com, he added 40%. That's a lot. That's a big increase. And JD.com is now 6% of his portfolio. If you check JD.com, you have a profile very similar to Alibaba. You have a company that is quite big, not as big as Alibaba. You have a PE ratio of 9, okay, and you have a growth that has stopped. Look at this. This is the revenue in blue. No growth since 2021. And if you look at the net income, different story. This is not clear and up and to the right. If you look at the most quarterly data, the most recent data, I want to check the cash position. Look at this. You still have a lot of cash. You still have a net cash of $6-7 billion. And what do you do with the cash? You do buybacks. So the story between Alibaba and JD.com is very similar. You have some cash flow. You do some buybacks. You are still big, still profitable, but the growth is, you have no growth, almost no growth for the company. So all the cash is used to reward shareholders. And additionally, you have a dividend yield of 2%. So 2% dividend yield plus a buyback yield of 3-4%. That adds up to a shareholder yield of 5-6%. So you have a 6% shareholder yield for a company that is for the stock price that is doing nothing, for a rather cheap valuation with a PE ratio of 9, EV to free cash flow of 9. Similarly, you are at exactly the same setup as for Alibaba, right? Okay, let me continue. He didn't touch his Alphabet position. He reduced Meta platforms, Facebook, Instagram, by 20%, similarly to Amazon. So I think he took some of the gains from the US tech and just moved it to the Chinese tech. The same thing for Oracle. He reduced by 10%. That is not changing the story for the investment thesis, just taking some of the profits to reallocate. And we are talking about another Chinese investment. For the Chinese ETF, he increased by 10%. If you look at this ETF, what is that? You have this ETF. Yeah, basically that's the Chinese index for large cap that has been doing nothing for 20 years, by the way. Betting on the rebound of the global large cap ETF on China, plus 10%, adding more conviction. He sold a little bit of Lyft, that's the car sharing company. And look at this, another energy bet, NRG. To be honest, I don't know this company. NRG. What is this? NRG is one of the largest retail energy providers in the US. Again, similarly to Vistra. He added a little bit more to AMD. Look at this. Another Chinese ETF. That's the famous one. That's the K-Web. And he added 20%. Okay. And you see that everything adds up. That's the Chinese ETF. Look at this. You have Alibaba, that is 15% of his portfolio. Pinduoduo, 8%. So that runs up to 23%. Plus JD.com, 5%. So plus 28% of his portfolio is into China. What do you have? You have this ETF. Again, 3%. So what did we say? 28? That's 31%. You add this one, 33%. Beidou is 2%. So 35% of his portfolio is into China. Beidou, in case you don't know, that could be the equivalent of Google, but in China. You have some differences, but this is not really important. This is a small part of his portfolio. And what do you have remaining? Yeah, that's basically it. 1/3 of his portfolio is into China. He is buying more. He trimmed the US tech a little bit to put the proceeds into China. And he's also invested in key themes. First, China. Second is the AI, US tech. Third is the energy. Some chips he added into Lam Research. I'm also a shareholder of Lam Research, so that's a chip component play. He is invested in AMD. So basically, he doubled his position in ASML. So same thing. They are the best at EUV lithography. Great companies. He added more into Micron. The themes of his portfolio are very clear. Very, very clear. You have some new holding here. Corning, that I don't know at all. What is Corning? Is a leader in materials science, specializing in the production of glass, ceramics, and optical fiber. Okay, that's interesting. Not in my circle of competence. I want to check the charts of this company. If you look at the revenue, almost no growth. They still have some debt. The free cash flow for this company is going down. That's strange. The net income for this company is going down. They have stopped doing buybacks. And if I look at the most quarterly data, I don't see a lot of change. So that can be interesting in case you want to get exposure to this market. This can be a potential investment for you. Corning. So that's a large company, $50 billion of market cap. Very interesting, very interesting. So that was for the update. It's a very interesting portfolio and quite diverse. You have 37 positions, but the themes are really simple to understand. China, US tech, energy, data centers, chips, and I think this portfolio will have a great performance. So that's it for the review, guys. I wish you a nice rest of your day. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.